What's good? What's good? How's everyone doing? How's everyone doing? I hope everyone had a great weekend. Since this is my first week back, first day back this week. Okay, let me move this seat up here. Okay. Alright, so we took a trade here during London session. So I'm going to mark this chart all over. Start here from the daily time frame. Alright, so we're gonna start off with gold futures here. And we've got our daily support here. We got another daily support. Got this support here. Support. It's another support there. And we've got our daily swing low here in this range. There's one more support here. And got a daily demand here. Got one more daily down here. Probably don't need it today, but going to use it anyways. Alright, so 4 hour, we got a 4 hour support here. Got another one down here. And we got one there. Got another support there. Mark up this 4 hour demand here. That was retested previously and shut off with that one. And this one here at the bottom. Just leave it right there for now. 1 hour. Uh, 1 hour, we've got this support here. And this high right here is going to be Asian high. And to mark up this 4 hour supply here. Alright, 30 minutes. Got a supply here. Then got this 30 minute supply up there. 15. $15-minute supply here. Leave it right there for now. Going to mark this 15-minute demand here. I'm anticipating that that would be where we might start pulling back from. I mean, have a bullish continuation from one of these two demands here. We might not even break below 29.21, but I'm expecting at least a liquidity grab. Because we have a demand here as well. But right now, we got a bearish momentum. So I'm going to mark up gold as well. On FOREX, I mean. So got this daily support here. See daily support. Support. Got another support there on the daily time frame. This low right here is going to be a swing low of this range. So another support. We got one there. Daily demand right here. Got another daily demand. Look at the 4 hour here. Four-hour support. Oh, we're almost at TP. Got another support here. Another support there. Daily demand. Daily demand. We had that 1 hour support on futures. Don't know if we're there yet on FOREX though. Oh. About to hit TP. Oh shit, we crossed the 1 hour support on FOREX and futures. Hopefully it gets to TP before it does this liquidity grab. Hopefully we wick out our TP. 1 hour demand. 30-minute. Let's do this 1 hour here. Ah, come on, gold. Hit that TP before New York opens. This 4-hour supply. Depending on how this 1 hour closes, we'll have a 1 hour supply here. But for now, we start with the 30-minute. Did we hit it yet on Forex? Guys, I've not been able to look at my account yet. I'm marking up this 15. Say 15 minutes supply here. Ah, come on, futures. Come on, futures. You're almost there. Oh, there we go. I'm already out.
Order filled.
There we go. Beautiful. 120 on futures, 120 on Forex. I mean 100 on Forex. Hey, good start to the week. I mean, for my week at least. Good job, everyone. Damn it. Oh shit. Alright, so New York session opens in 4 minutes, guys. the hell? Why is it showing these crazy numbers here? What did I do? Huh? Oh. And then, so. Let's see. Okay. Okay, so we actually did close below this 1 hour support here, and looking at the 1 hour here on futures, we now have a 1 hour supply here. Even though we have all this demand right below, I am still looking for sales here. I would prefer taking a demand setup, preferably the 4 hour demand or the daily demand. But for now, I am not interested in buys at the moment. We're still looking at short-term sales here. So we got a 1 hour supply there. Okay, same as the 30. And we've got a 15-minute right here. Okay, so now we just simply wait. The only way I will take a buy is if we have, since we have a break of structure, minor break of structure to the left, let's say we come back down to this 15-minute demand here, and we have a push to the upside pretty much. Damn it. So push, come back, then I'll take the buys, and then any of this supply above would give us the continuation to the downside to break a support that we form here. So that will be the buy setup that I will take. Uh, Man, this 1 hour demand down here is not bad. Could get a possible pullback here or a bullish continuation at this 1 hour demand here. So let's see. YouTube is quiet today. We probably don't have a lot of viewers watching today since my absence. Let's see how many viewers we got on YouTube. Oh, and real quick, we've got Powell speaking pretty much 2 hours from now.
Maybe we should check all.
I have been up all night. Alright, so guys are hopping on, do me a favor and smash that like button. It helps the channel grow. Don't be stingy with the likes. Oh, did everyone get one-to-one on that the London session sales? I hope so. Maybe except for Pi. Aside from Pi, everyone should have at least had the one-to-one. Yeah, I saw that, Didi. I think you had a pre-London entry or something like that. Oh, okay, Pi. Okay, okay. I see you. I see you over there. I see you over there compounding your money. Where's the gang? Can't hear them. We were pretty much here from 2 a.m. till now. We were in a London session trade for yeah, pretty much from 3:45 pretty till now. So that's what, let's just say 4 hours. So the gang is probably tired now. That's why they're not talking. They should still be talking though, because we won the trade, so, but they're tired though. Can you not send photos on WebEx chat? No, there must be a way. But you can't send a photo. Do not photo is your favorite pair apart from gold. Yeah, it's not a bad pair to trade, especially down in London. Is Wal and Lucian still here or they left? Oh, they're still here. Yeah, some people missing. Nas is my concubine. Oh, you guys are scared of Nas though. Where's Wow? Streaming Nas? Who knows? Wow might be streaming Nas. Yep, complete silence. Okay, 30-minute demand here is not bad. That could hold also. It's a very strong demand. Let's see what we got there. Okay, the 1 hour there. Excuse me. We got 86 people watching, so we should have at least 50 likes, because I know some people are still not gonna like this stream. So remember what I said in the beginning of the stream, guys. So any of this demand here will be the zones that we'll be looking at for buys. And also remember, the higher time frame is still bullish. That's the overall structure. Even here on the lower time frame, which is this 15-minute time frame, we still have a bullish structure. However, we have a bearish momentum here on the lower time frame, and not only do we have a bearish momentum, we have a break of structure to the downside. And the structure we broke is actually a 1 hour structure. So that is technically also an higher time frame, which is pretty, I call the 1 hour time frame the intraday time frame, which is major as well. So now since we actually broke and closed below 29.21 on futures, on Forex we have the breakout structure as well. On Forex the price is 28.96. So now since we have a breakout structure, we should expect price to pretty much eventually create another lower high. That's why we have all these suppliers up here marked. The lower high for price to continue to the downside, hopefully to create a new lower low and pretty much continue to the downside. Now, that's what we're going to do if we look into take sales. However, I'll be down to take buys as well because the overall structure is still buys. Now, in order for me to take buys though, remember we have fallen, so we have a bearish momentum. So since we're falling with a break of structure, even if this 30-minute demand holds, if this 30-minute demand holds, let's say it's this candle, then of course I will look to take it above this previous candle if this candle closes rejecting the 30-minute demand. But because of how we're falling, bearish momentum with a break of structure, I'm not going to do that. What I'm going to do instead is to let price give me that aggressive push to the upside, at least 2 to 3 candles. And if it's going to be one candle, then it has to be a very crazy bullish engulfing candle, even if you see on the 15-minute. But if we have that aggressive buying to the upside from the demand, at least on the 30-minute, then we have a higher chance. And if it's at least on the 1 hour, we have an aggressive buying from the demand on the 1 hour time frame. You even have a higher chance of price coming back, retesting the lows, and then we look to take buys from there. So I'll pretty much wait for the push, price to come back to wherever the demand is going to be, and then I'll look to take my buys. The reason why I will do that is because, like I said, because of the aggressive push to the downside with a breakup structure. If I just get in just because we rejected the demand, price could do this and then bam, comes down and continue to the downside. So in order for me to avoid that, this is the setup that the buy setup I will be looking to take. Okay, if we do not get that, then we're going to keep waiting for a sell setup. I hope that makes sense. Hey, I'm good, I'm good. So guys, Our London session analysis was pretty much 100%. We also anticipated that gold is going to at least either grab liquidity below this low or close below, and we got exactly what we wanted. Wait, can you guys even hear me on WebEx? Oh, I can't hear you guys. Wait, have you guys been talking? No. Have you guys been talking?
I think there was a little bit talking.
Damn, I didn't hear nothing. The speaker on WebEx was on something else that I don't have connected. Did you check that sale down in London one? Were you in it with us?
Yeah, I took. Oh, I got feedback. I can hear myself.
You do?
Yeah.
Maybe it's on your end. Wait, let me see. Um, yeah, you shouldn't hear yourself.
Let me check YouTube.
Yeah, you shouldn't hear yourself. How is it on YouTube?
Yeah, it seems to be on my end. I'm gonna log out.
Yeah, cause I can. It's not echoing on my end. The question now today, guys, is are we going to get a setup before Powell speaks? Because after 8:15 my time, I don't want to take any trade until after Powell speaks. And then again tomorrow, he's also talking tomorrow. We were talking about that during London session. We were like, man, Trump must be trying to get rid of Powell because he's pretty much talking back to back. He's talking tomorrow and today. He's pretty much testifying today and another one tomorrow. So he's testifying back to back, 2 days in a row. So best believe whatever he has to talk about, it's definitely going to affect gold. So we'll see. I'm actually gonna give it an hour, so we got 30 more minutes. We got 30 more minutes to see if we can catch a setup here. Because if we don't in the next 30 minutes, I'm gonna wait for Powell to speak. Even though gold can pretty much give you, at least get you, depending on what your stop loss is and what you're looking to catch, how many pips or ticks if you trade futures you're looking to catch, gold can give it to you in 1 hour. But the fact that Powell is testifying today, you might get in a position and then gold just starts ranging. So you see this pretty much gold grabbing liquidity below this previous candle low right here. Now there is a chance we could just continue up here, or this next candle could actually come down and we could get another liquidity grab below this candle, this bullish candle low. If that happens, I will look for buys. If that happens, because now what you have here now is price. Now this one here, if you take this, let's say you took this candle, you have a 50% chance of winning this trade, at least back to one of the supply. That might happen. And also there's also a chance this next candle could come down, and instead of grabbing liquidity below a previous candle, now it will be doing it below a support, and that is stronger. Then we can look to take the buys here. Plus we've not tapped the demand yet, so we'll see. We shall see. We get it, get that liquidity grab below this support, which will be better, not below a previous candle. Plus for me personally, if I'm looking to take a buy side liquidity trade, the candle that grabbed liquidity below the low, now this is what I do. Some traders do it differently. My buy side liquidity, for example, this bullish candle that grabbed liquidity below this candle, for me it's not a liquidity grab here for two reasons. Number one, we're not doing it below a support level. That's number one. Number two, since it's a buy side liquidity, I need that candle, the candle that rejected, I need that candle to close bearish, not bullish. Now, I'm not saying if it closes bullish, it's not going to go up as long as it did it below a support level. I'm not saying if it closes bullish, it cannot go up. That's not what I'm saying here. I'm just saying that based on my experience, I win more when it's a buy side liquidity setup if that candle closes bearish. It doesn't have to be on the 15-minute time frame. It could be on the 30-minute. It could be on the 1 hour. But as of right now, let's say this is a support right here, and we did it here. The candle closed bullish. I won't be interested in taking it because the candle that grabbed it did not close bearish. That's here on the 15-minute. But if it closed bearish on the 1 hour, right, then I will take it on the 15-minute time frame. And if it closes on the time frame that I'm looking to take my entry on, then it's even better. It's like, you know how sometimes you take a setup and then you just have like all this multiple confluence to take that trade, pretty much multiple confirmations. That's pretty much what I'm trying to explain here. Let me just put it this way. In trading, the moment you get to a point where you actually know exactly what you're looking for, you know how to analyze different type of setup. Oh, if this happens over here, I'm gonna take it. If this candle formation happens over here, I'm gonna take it. Once you get to that point, you've arrived. There's no way you're not gonna be profitable once you get to that point. You've arrived once you get to that point. Just keep going, keep doing what you're doing. But if you're not at the point I just mentioned, yeah, don't worry, you will get there. You just have to be patient. You might probably have to invest in yourself or just keep trying to do it on your own. But doing it on your own is definitely going to prolong your journey. But if you're okay with that, then keep going. I learned how to trade on my own, and I wish I did not. Oil ain't gonna do much, man. I disagree, Light, because he's testifying. And Trump wants somebody else. So it's definitely, I'm not gonna say definitely, it should affect gold. Trump wants someone else on that seat. And it's not gonna be easy to do. Oh, Database, you can't find the link for WebEx? We didn't send a link for New York session, so it's the same London session link. You know, we couldn't get off down in London when it was the trading London session. Because the trade just took that long. So it's the same link I sent to Discord earlier. It's the same one. Oh wow, you still here? You still hearing yourself?
Um, yep, I can still hear myself.
Ah,
Oh well.
try disconnecting your. You have a headphone on?
Yeah.
Yeah, try disconnecting it and reconnecting it again. Maybe that will work.
Testing. Nah, it's the same.
Oh. And it wasn't like that during London session, was it?
No, it wasn't. And I didn't even do anything.
Mm. Damn, that candle just spiked up and got to that supply and rejected, straight rejected. Spiked up, got to that supply and rejected. Let me see this other floor level. I mean, the other we have right at that supply is it's not a lot. The higher one though, that's the one 2937 or so. 27? Oh, okay, you didn't get that yet. Didn't get that yet. 2927 up to 2925. Yep. 2925. Oh no, we got it's not huge. You got a small order there. That's where the 26 is, right? Well,
Sorry, the 26?
mm-hmm. Where we at right now? 2925.
Yep. So you're seeing like a big order or something?
I mean, I don't know if it's big enough, but there are more orders below it, but we rejected. But at that time, someone big got in the market.
Yeah.
And
That
sold
whole
from there.
31.0 area,
Huh?
the whole 2931 area is huge supply.
Mm-hmm. 2931?
Yeah, all around there.
Oh yeah. Even 2932.
Yeah.
Wait.
Well, I think you have the music mic, live music.
What?
I couldn't hear him.
I couldn't hear him either. I heard something about music. Oh, that's a good question. Wow. Do you have WebEx open on your computer and on your phone?
No, just on my computer.
Huh. Lucian said he thinks you're using a live music microphone.
The weird thing is when Lucian talked just now, it was super quiet, but I heard him echo.
Oh, I
I,
didn't
I don't
hear.
know. I think WebEx is buggy.
Hmm. Oh, is it just you have it on just one computer or two?
Just one.
Hmm. One thing I know about WebEx, that I know now about WebEx is that it requires good internet connection. 'Cause when I have bad internet connection, it starts with the microphone.
Oh.
It will like let me know on the screen like my internet is slow, so my audience might have a hard time hearing me. Since we pretty much have our pullback from here, so I have time frame. This current candle pretty much closes in 6 minutes. I mean, oh no, no, it's too low. Too, we need the candle to close bullish. Yes. If the 15 does not close bullish, we need the 30 to at least close bullish, or the 1 hour to close bullish. 2 more minutes. This thing gives us a sell setup. You guys think it can give us what we want in an hour?
Yes, the setup will come 10 minutes before the news.
If it's 10 minutes before the news coming out,
Solution didn't echo for you?
his mic sounded weird, but it didn't echo.
Oh,
It's
I
echoing
heard them
for me.
echo.
I hear my voice.
Yeah, so it's not just me.
Test, test.
Edin also echoing.
What?
Yeah, we can make a band.
Edwin,
Testing, testing.
Yeah, echoing, right?
Everyone is echoing on my end.
Yeah, WebEx is buggy.
what about you, Edwin? Are you hearing yourself?
I can hear myself.
Huh. What about you, Pi?
Testing, 1, 2, 3. Yeah, I can.
Basically, it's double audio something.
Huh. Wait a minute. All echo
Did you
here.
use speaker, King?
No.
Weird.
I mean, I don't have any. Yeah, it's the same thing I've been doing.
Oh man, looking nice now. Should be a nice sales.
On the move because we've been on this for too long. Wait a minute. How web-based can handle usual 6-hour stream?
If you stream 1 or 1 hour more, you will see black and white only.
Yeah, I'm going to use another 120. Mm. 120 on FOREX. Let's see. Alright guys, because we've been on this one for too long, so I'm going to send another WebEx link real quick to Discord. Alright guys, send a
Yep.
new
Sounds
one.
good.
Oh, come on, come on, come on.
This meeting is being recorded and summarized.
Say something, Pi. Let's see.
Testing, testing. 1, 2, 3.
Do you hear yourself?
Nope, nope, that was okay.
Okay. WebEx must have got tired. It's not echoing on YouTube. Okay.
Test.
There's a higher chance we could push higher here because of this candle right here. The way this candle flipped, it shows a rejection at the bottom here because of this long bottom wick. So we could go higher. Might not go too far, might just either tap the 1 hour instead, or even this 30-minute up here, or we might even go all the way to the 4-hour supply. So, of course, looking at this, the 4-hour supply is the strongest. And also, since the high that created this low is right here at around 29.34 on futures. We could go all the way up there, grab liquidity above it, and then reject the 30-minute supply instead. Forex is already making its way up there. It's even a 1 hour supply too. And same thing on futures. Oh, it's not 1 hour. This is 15 minute actually, not 1 hour. Okay. Touch that 1 hour supply then. There we go. There we go.
Getting closer to Powell's speech.
We got 2 more minutes left on this candle. Let's stay with the same. No echoes. Okay. Yeah, YouTube wasn't echoing. It was WebEx. We got 35 more minutes for, well, 34 more minutes now for the news. We'll see.
I will pass this one. We have 30 minutes.
You said what?
I think I will pass this one. I will not take it because of the news. We have like 30 minutes.
Yeah. I'm not telling what gold is gonna do.
Now you can hear me better or worse?
Oh, it's better now.
Yeah, the last 15 minutes are rangy, and we have, yeah. Can be a quick trade, but maybe the news will give another retest and.
Is risky since it's Powell speaking.
Yeah. Who knows what can say?
Don't worry. Trading
knows?
New York's always risky now because Trump can just tweet at a moment's notice.
Do you know when Trump he has vacation to be a little bit relaxed here, and it's gone vacation to take our 50 pips stop losses. Because now you need 120, 150.
Man, you can't make a stop loss big enough to avoid that Trump tweet. It's too crazy.
Yeah.
Well, please take a vote for me. I'm gonna go use the restroom real quick, guys. I'll be right back.
Yeah.
Can you take your live mic?
My live mic?
Yes. Now. We trade.
Stop that.
Yeah. I will wait now. And what a crazy rejection from. I think this is the 50% Fibonacci from somewhere.
From somewhere. I'm not gonna lie, when it dropped that fast, I was very tempted to just hit the buy button.
Yeah. But
Yeah.
you see was some in the first big red candle we had a very big order. They tried to catch the falling knife but didn't stop the price, and then only on the second bearish candle you have these 250 orders in the bottom of the week, and then the price stopped there, but it's hard.
Yeah.
And then on the green candle immense buy order retested and boom.
Yep.
Fly.
I heard that the London banks, they don't have enough actual gold to fulfill the, like the contracts that people actually have of gold.
Yeah, but
Yeah.
so is with the futures market in the CME comics market. On the futures, they say they trade like three times the volume that the gold exists. It's more because they don't want the actual gold. They just want to trade the price, and it's more traded that really exists.
So it's like, that's a pretty big problem. That means they have to be forced to buy gold in order to be able to fulfill their contract.
Yeah, for the people that really want the gold.
Yeah.
I understood that the firm that make jewelry, are the biggest clients for the gold, spot gold market.
That makes sense.
And now with Trump, maybe the people have more money and they need more jewelry. And I understand that banks and like central banks, they buy also gold from spot market, not from futures. They need the gold like to. On futures, you need to wait for the rollover to have the gold. On spot, you can buy it and you have it in 2 days. Yeah, but still looks bullish, more bullish than bearish.
Oh yeah.
Every drop, like you think now it's gone. Yeah, it's gone. It's gone up. Yeah. You need to change the bias, so the gold its bias is bullish forever. Like last year was very, very profitable gold.
Yeah. This year tricky.
Yeah, it's all-time high. So was after break 2000, like some months they there make some ranges and then broke out from there and go. They need to see who's accepting the price, who I want to buy more at the prices. If you had BE on London trade, now you're gone. Your BE is gone.
Ah, sorry, Pi. Bad luck, buddy.
He's in what?
Oh, well, he had like a runner, he said.
Ah, but yeah, he want to hold for 2000.
Yeah. Hoping and praying.
No, Pi
Just
was
like Edwin's friend.
no Pi was holding for 1,000. He was holding that gold sale for 1,000.
And I think you have more chances to see Chuck Norris dead than go to 1000. It's hard. It's a break even, but I bet more on this. They say when the mobile was invented, like the cell phone was invented, and they opened the cell phone, they had a lost call from Chuck Norris.
I remember I used to like watching his Texas Ranger when I was like a little kid.
Yeah, was the time when Tex Ranger was not dressed like pink and red.
Well, at this point, we gotta wait for the news, guys.
I told it the setup will come 10 minutes before the news. It's always the same.
Yeah.
Then activators and hit stop loss and then TP. This month, the London trades was only winners. Nice trades.
Yeah, London has been doing well lately.
I
Thank
think,
God.
yeah, I think Pi's lobbies take effect.
Yeah. Good job, Pi.
Forward Saga's wife Journeys. I don't know if I responded to you. But if I didn't, I said we got news, so we don't know what's gonna happen with the news. But without news though, I will still be interested in the sales until we either come down lower or we start breaking structure to the upside. And we only got 56 likes. What? I'm breaking up? Am I breaking up on WebEx, guys?
No, you're not breaking.
Oh, okay, okay. Edwin, fix your headphones. Got 5 more minutes. What is Powell going to say? What is Powell going to do? Yeah, it's speaking today and also tomorrow. The SL is gonna be 120. We're gonna move this entry lower though. I'm going to use this candle. 1, 3. Okay. Oh, damn. Right before the news too. Can we get more likes, guys? Let's get 200 likes at least. Wow. Well, this is rap, man. Slow. That's the entry I wonder for futures. Not in yet. No, we were not on a trade. We were waiting for the news. Okay, looks like we might take it on Forex first. I mean on Forex. Oh damn, I missed it. Oh snap.
Order filled.
Oh, you gotta be kidding me. I missed my entry here. Shit. Oh, 60, 29, 13.1, 9, 13.1. Oh shit, where's 60?
I think Paul is still speaking, or?
Huh? If he is, I already.
On Forex still 100 or 120?
I use 120. I didn't get the entry I wanted at all. At least on futures. Oh shit. Oh. Oh. This freaking messed up our entry. It's all good though. We're in on both of them. Man, that's a freaking crazy flip right there.
And they don't speak good for the gold. Only chaos and co-president Musk, and it's live.
Mm. Mm. Man, this is one main freaking flip right here. If it goes up, that'll be crazy because it didn't even tap the demand. If it had done that, yeah, we'd be waiting for buys, just like I explained in the beginning of the stream. But we didn't tap the demand. Stop loss on futures is tighter. So we can just freaking retest these lows. There we just tap right now. And we can still fall.
Let's see what Paul is answering now to these hard questions. Maybe he says something that bring the gold down. Now it's all about what Paul is saying.
Oh yeah, it's testifying. Oh boy. Be patient, it will drop. Man, since Powell is still testifying, ain't no telling.
Man, and he's sweating.
Mm.
And this woman is not ending with this crazy speech. Oh, let's see.
Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate
Come
at
on,
5.25%
Powell.
to
Keep saying good
5.5%
things
for
about the
14
dollar.
months.
Come on.
That recalibration of our
Keep
policy
saying
stance
good
was
stuff
appropriate
about the
in light
dollar
of the
so
progress
gold
on
can
inflation
drop.
and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings.
All right, all
With our
this is
policy
good for the
stance now
dollar.
significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint.
Are you looking to establish your business using an address other than your home? Well, at iPostal,
Thank you.
too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools.
Wait, did he just
The
mention
committee's
gold?
2% longer-run inflation goal will be retained and
gold.
will not be a focus of the review. Our review will include outreach and public events involving a wide range of
Wait,
parties,
did he say
including
gold
Fed
or
Listens
gold?
events around the country and a research conference in May.
I think he said gold.
We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed,
Yeah,
we'll do
Matthew.
everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell.
Drop.
Certainly your words and your actions
Before he starts
have a
speaking again.
global impact. You have the opportunity and responsibility of leading this country in the right direction
Hope the next
economically, and
election is
I
also
thank you
good
for your
for
commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. As we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs and MRAs that went really documented, but no action was taken.
I don't know about those answers.
Conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right, first of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this: after having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from the CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries, and that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director Vogt effectively shut down the CFPB. No more cop on the beat looking out for a family of four in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President Musk and CFPB Acting Director Vogt, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I have my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too-big-to-fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you, but several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and, in your own words, would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that, and so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Let's hope his
Thank you.
answer
Senator Rounds.
be
Thank you,
good.
Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. I've got a series of questions, but I would like to give you an opportunity, if you would like. The suggestion that the ranking member has made here is that the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any
Any
law
changes,
changes.
any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very
if
good.
If, in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. Now, I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks, it's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably quickly, one that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks, and I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, you know, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area, I would guess.
Our expectation would be, and the markets would expect, that it would be neutral with regard to capital.
In that range, but I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And when the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about, is this an appropriate order? Is this payee on the note don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are, in fact, the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And, you know, people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this, it cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details. I mean, one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet, and I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Setup for us.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you, and thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern, and you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you
determine
that relationship?
Stuff? CFPB. So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under $10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising
you might be watching the chart and
yes,
the
we still retain
speech
supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be CFPB.
Yes. Yes.
Okay.
Oh,
and so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has $10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there is a gap. If the hypothetical is true, and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't supervise.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach, but there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing
Not
from
looking
many of
good
us
right now.
on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you. Let me ask you this, and you know, we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home.
Oh, on futures.
And we know that's still an issue, the high prices
doesn't look
right
good.
now for home affordability.
No.
You add the interest rates to it, it is a problem. So do
Pretty
you
much
think
the
it's most likely that
setup
interest
I
rates will
was
remain above
anticipating
6%
for
for this year, or
buys.
can you even address that?
I didn't even get to the
So
demand.
overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, of quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. That's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, you know, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen.
Is your FOREX
and even when it does happen, we're
stop
still going to
loss
have a housing shortage in many places.
quite a
Thank
bit
you.
bigger?
Chairman Powell, thank you again for being here.
No, it's the same. I have a 120.
Next will be Senator Kennedy.
Okay.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here.
Yeah, but the entry is different. That's
My
why.
friend, our ranking member,
Okay.
said that you are knuckling under to the big bank lobbyists. Is that true?
No.
It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
Very, very well.
Man, I don't like all these questions.
Are we in a recession?
We are not.
Would you, as an American,
Futures once higher.
trade places right now with Germany?
The questions they were asking earlier when we started watching it.
How about China?
Those were good questions. This one's.
How about France?
No.
No thanks.
That's gonna make gold keep going up.
Things aren't perfect. Inflation's obviously still
I have no idea what they're even
and
talking
long
about.
rates are too
I'm
high,
just
which I
trading
want to
as.
talk about in a second. But the fact is, knock on wood,
I'm
we have
definitely not
experienced
gonna
a soft landing.
freaking trade this
Not
tomorrow.
for me to say, really.
Nah.
Tomorrow
I'll let
goes
others-
Well, haven't
double
we
news,
experienced
right?
a hard landing?
Probably.
No, we sure
Are we
Tomorrow's
in a
double
recession?
news, so you have
we're not.
even less
I call that a soft
opportunity.
landing.
Yeah. We're gonna do New York tomorrow.
And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the
Can't
Federal
be just
Reserve
with
behind you
freaking
deserve some
Friday.
credit for that.
I gotta do it the middle of the week.
I don't know why you
Also,
don't
with
take the
gold,
credit.
futures
Everybody
gave a
else in
buy
Washington,
setup, but
D.C. does.
not on Forex.
What? On the
Again, I'm
15
not saying
minute?
things are perfect.
Yeah, it rejected the demand
What
I
demand?
never imagined that our
on
landing
futures.
Yeah, which one?
could be this soft,
Right there, the 15.
albeit not perfect.
This one?
And I wanted to thank you and your colleagues for that effort.
Oh, no,
Sure
no, no,
didn't
no,
get
no.
any
The newly made
help
one, the one that I just
from
created
Congress
off the
and
lows,
Oh,
off that big
oh,
push
oh.
up.
our
Yeah, yeah,
president
yeah,
on
yeah.
the
But
fiscal
because
side. I don't expect you to comment on
I
that.
was expecting
You and
it
the Federal
to
Reserve can
come to this 1 hour
to a
demand
large
here,
extent
or
control
I
short
did
even,
rates, can't
expect
you?
it to go lower,
Yes.
but
or even the 30
Through the
minute,
open
this
market
30
committee.
minute right here.
You can't control long
it's
rates,
just too
though.
That was
bullish.
what I
No, you
was
can't.
looking at for it to get to
Why is that?
So
then look
a
for
lot
the
of things
buy
go into long
setup. And
rates,
this was
and
pretty much
one
the
of them
buy
is the
setup we were
expected
looking to
future
take
short rate
if it
of
came down
Fed
here.
policy, but many other
This,
things
this,
go in.
and then
Expectations
just
of inflation in the
take it.
longer run,
But
the sort of risks
it
around
didn't get there.
around the economy and around the budget
Yeah.
deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, it's set by supply and demand in the bond market at the long
Gold
end.
respects
And we're not particularly,
the levels on
we have some
futures way
influence,
more
but
than
mostly
Forex.
not.
So it just taps it and flips.
Many Americans are looking at short rates and looking at the Fed's
Yeah, well, it would have
behavior
just
and how
made more
you
sense if it came
reduce
down to the
inflation, but
30
they
minute
don't
instead.
seem they
Oh,
they don't see the long
before
rates
it
going
decided to
down,
go
and obviously
bullish.
that
Yeah,
affects mortgage rates. And I would encourage you and your
yeah,
colleagues to
well,
spend some time explaining to the American people
it is what it
why that
is.
is. Final question. If you went home tonight and Mayor Powell, your spouse,
Gold has been
said, I
trashed
got
this
a call
year.
today from our
No, it's
bank,
just totally different
and they're
to trade. It's like just buy
debanking
every
us.
fucking dip at the
They're worried
start of
about
the
their
year.
reputational risk because they don't like our politics.
I mean, that wouldn't work either.
Would you
Because
think that
imagine
fair?
if you freaking
No, I sure wouldn't.
bought
As I mentioned earlier, I too
bought
am
Oh, I
this
troubled
mean at
by
the
dip here,
start of the
the
year,
QUANT
January.
this here,
reports,
huh?
and
I mean
really want to
January, the
understand
start
better
of
why
the
this is
year.
happening.
It was just like
One
buy
theory
it
is
and
that banks
this
are just very
fucking
risk
go to
averse
the moon.
around BSA and money laundering,
Yeah,
and that's because we're so tough on them, and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking
yeah.
that
I'm gonna
concept
just
out,
do
the
London
manual that we've been
session
using
tomorrow, and that's it.
for account access, for
All
master
right.
accounts. We're just going to take that out. But I think this needs a fresh look.
That's
I think
crazy. We got
it's time for that, and
CPI
we're
tomorrow,
going to do that.
and
Well,
then
I've
we will be
asked our chairman,
speaking
and he's agreed
again.
to invite
Oh,
some of the
damn,
CEOs
CPI.
of
That's
some
gonna
of
be
the
huge.
banks that have been
Yeah,
debanking
and then 2
people.
hours after that,
The CEOs, not
Yes,
their
1 hour,
lawyers,
30 minutes after
not their
that, they'll
PR
be speaking.
consultants,
not the lobbyists.
not their priests,
Nah, I'm gonna stay away
them,
from NY
the
tomorrow,
CEOs to come in and let's talk about this and
and
find
then
out
come back
what
on
the hell's been
Thursday.
going on.
Thank you, Senator Kennedy.
Yeah.
Thank you, Mr. Chairman.
So YouTube,
Thank
I'm
you,
not gonna be here for New York
Chairman
session
Powell.
tomorrow
Welcome.
because
Thank
I
you very
won't be
much.
trading.
I think your
But
monetary policy
I will be
combined with the
trading
Biden
London
fiscal
session
policy over the
though.
last
But
4 years has
I
made a
don't stream
tremendous
London
difference.
session
We've
on
avoided
YouTube.
a recession.
That's
And I'd like to
that's
remind people how far
private.
we've come. In 2020,
So
the gross domestic product
this
decreased
morning, at least on
2.2%.
futures,
The
I
unemployment
just
rate
gave back.
finished the year at
Well, shit.
6.7%. By
Um,
2024, gross domestic
pretty much a
product grew
losing day for me
2.5%.
today.
The
I
unemployment
gave
rate was
back what I made down in
4.1%.
New York. I
Labor
mean,
force
down in London,
participation
and
rate went
some
up
more.
from 61% to
So
62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra, an increase of inflation by nearly 10%,
shit.
economic growth
Yeah,
depression,
see that
and,
the
for
questions
example,
they
they increased the
freaking
average
ask,
car price by
like, it's not,
$2,700. Is that a wise
it's
policy?
like,
So I guess I ought to say this.
it's not looking good for
I
the
think the
dollar.
standard case for
The
free
dollar
trade and
might
all that
probably not even be doing
logically still
anything
makes
right
sense.
now.
It didn't work
Let
that
me
well
take a look.
when we have one very
It's not
large
even
country
doing
that
shit.
doesn't really play by
Yeah,
the
look
rules.
at it. It's
And
not.
in
It's
any
not.
case,
It's
it's not
not
the
doing
Fed's job to
anything.
make or
Oh,
comment
it's
Started
gonna
talking
on
at
solve
this.
it.
Yeah, because
really,
it's
that's for
not
elected
bad. It's
people,
not
and
good,
it's not for us to
and
comment.
I don't like
Ours
that.
is to try to react to it in a
It's
thoughtful,
not doing
sensible
anything,
way
but
and make monetary policy
just
so that
keep
we can achieve our mandate.
reacting to it.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, YouTube.
It's pretty clearly
You
not
sell
allowed
now,
under the law.
man. Shit, don't even, man. I wouldn't sell like shit. I wouldn't even buy.
We've communicated
Shit
back and forth about synthetic risk
with this
transfer as
speech.
a potential danger
Oh,
to the banking
it's
system.
gone. Yeah.
It's gone. So
And could
YouTube,
you
I'll
give
see you
us some
guys.
insights on how
Shit,
we can
what's today?
improve financial stability by
Tuesday?
regulating these transactions more
Today's
appropriately?
Tuesday.
What
Yeah.
we've been
Cut off
doing
the
for some
audio,
time
the
now
YouTube,
is
the speech
looking at them
audio.
on a
Sorry to hear
case-by-case
you.
basis. And if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank.
Yes, YouTube. I'll see you guys on Thursday. I'm not gonna be here tomorrow because of this freaking. We got CPI and we got Power speaking again tomorrow down in New York. That's not good. So I'd rather stay away. So I'll see you guys again on Thursday. We lost the trade today, so we still got Thursday and Friday to still be able to have a profitable NY session and a profitable week. So I'll see you guys then. Thursday. All links is in below in the description if you want to trade London with us. Pretty much learn how I trade. So I'll see you guys again on Thursday. So I'm out. So I'll see you guys tomorrow down in London.
Yep. Thanks, Ed.
You're welcome, guys.